Hello everybody, Ron Wheeler here, manager of options trading at VectorVest, and it's my delight to bring you tonight's special presentation, the safest stocks to outperform the market. Now, before we talk about this, first off, let's discuss the big picture here. First off, can we outperform the market? Is it something that's obtainable? Can we actually do it? Well, to answer that question, let's go to the foremost expert on investing, Google. Can you beat the market? Well, first thing I come up is from Newsweek. It is possible to outperform the stock market. Great. So we've got a good baseline here, but it requires choosing individual stocks or investing in other assets that provide higher returns than market average. Okay, cool. We got a good baseline here. And then let's go down a little bit more. Is it possible to beat the market consistently? It's relatively common to beat the market for 1 to 3 years at a time. Okay, that's not so good. That can largely be explained by luck. Not good. But the data clearly shows that even professional fund managers are unable to beat the market consistently over a longer period of time, like 10 to 15 years. Let's keep looking. Risk is key. There's another way. One way to beat the market is to take on more risk. But while greater risk can bring greater returns, it also brings greater losses. Well, that's no good. We don't want to be risking too much. That's not cool at all. Let's take a look here. What percentage of money managers beat the market? Of those positions, only 44% beat the index over the period in which funds held them. Small cap managers fared better, as 46% of their nearly 160,000 positions topped the index over the holding periods between 2013 and 2023. Okay, 90% of funds picked more losing stocks than winners. All right, let's keep looking. We'll skip Reddit. All right, let's see here. You may be able to beat the market, but the investment fees, tax, and human motion working against you, you're more likely to do so through luck. Is it true that no one can beat the market? And there's that same kind of 1 to 3 years at a time. Well, let's talk about this a little bit more. Before we talk about how to beat the market, first of all, let's talk about the market. First off, what moves the market? Because this is an important starting point for how we're going to choose good stocks that can beat the market over time. Now, while I'm talking about this, understand I'm not talking about over the next 1 year, 2 years. I'm talking about a very conservative approach. Pick some stocks, ride through the runs, dips, rises. Can we beat the market over the long haul? And again, it all starts with what moves the market, and that's earnings, inflation, and interest rates. But let's go into this a little bit more specifically. Since we're talking about stocks now, what stocks are we going to look for? Well, what moves a stock? Earnings are the primary driver of a stock's movement. So getting back to the core of what we're here to talk about tonight, can you outperform the market? The answer is yes. And the best part about this is it's not as hard as you would think it is. It's actually pretty darn easy. The way you do it is you focus on picking safe stocks. Now, we talked about earnings. Now I'm talking about safe stocks. Am I shifting gears here? The answer is no. Because ultimately, what is a safe stock? Safe stocks are those of large companies with outstanding records of financial performance, i.e. a good history of earnings, right? They have low debt to equity ratios, above average price stability, and a propensity to rise in price. VectorVest also considers other factors in assessing stock safety. Now, these are described in the chapter entitled Stock Safety, the missing link in Dr. DeLito's book, Stock Strategies and Common Sense. It's one of the first books and one of the first things I read when I came to VectorVest back in 2015. Now, I said 1990 there for a second. I started trading in 1997. I've been doing this a long time. And for the first, 16, 17 years of my trading career, my trading decisions were based on graphs. I looked at things like technical analysis, stochastic, Fibonacci, Elliott waves, Gann, all that sort of thing. And it's very, very difficult to master technical analysis. But when I came to VectorVest, I learned a much easier way to do this. And, the best part about this is I don't have to make anything up. I can prove to you that looking for these safe stocks is the easiest way to beat the market. So how do we do it? Well, we introduce the study relative safety. Relative safety and relative safety alone is the easiest way to beat the market. And now keep in mind, I'm not talking about beating the market over a 3-month period, over a 2-year period, over maybe even a 3-year period. I'm talking about easy, long-term results. So relative safety is basically everything I described to you on the last slide. It's a complete analysis of stock safety. It's contained in that indicator called relative safety, or RS. On a scale of 0 to 2, values of relative safety above 1.0 are favorable. Values below 1.0 are unfavorable. So what I want to do with you is I want to take you through an exercise of looking at stocks with high relative safety over the years and showing you exactly what they look like on a graph. All right, so in VectorVest, let's take a look at this. I'm going to click over to my Viewers tab, and we're going to go over to where it says Stock Viewer. And here's my stock viewer, up to date in real time as of August 29th, 3:59 p.m. All right, so what we're going to do is this. We're going to take a look at the stock viewer, and I'm going to sort this in order of relative safety. So to sort the columns by relative safety, I'm just going to click on the RS header. Just click on that one time, and after a couple seconds, you're going to see all of the stocks are now in the form of highest relative safety. So I want to look at a couple of these stocks just to give you an idea of what is a good stock. So let's graph just the top 5. 1, 2, 3, 4, 5. Let's go ahead and graph those guys. And this is what they look like right here. So this is Arch Capital. Now I've got a 1-year graph on Arch Capital, but the one thing you're going to look at over first off the 1 year is look at how well this stock has done. It started back last year at around $80 a share. Now it's trading at $113. Okay, let's remove RT because I'm not really worried too much about that one, but look at the earnings. Look at how earnings have been so step ladder up. That's what you're going to see in a really good stock. Let's take a look at the next one on the list. ANET. Again, over a 1-year period, $200, now trading at $350. And again, look at the earnings rising. That's a beautiful stock. Same thing with DR Horton. Okay, started the year at around 120-ish, now it's at 187. DEC, look at that. Started the year around 500, now it's at 940. Look at the earnings per share. What you're seeing here is stocks that have good performance. Now again, I'm talking buy and hold here. I'm not talking about getting in here, getting out there, applying some more advanced market timing. I'm talking about simple, simple, simple. So these are the kind of stocks that I want to look for. So here's what I'm going to do. Let's do a couple exercises here. I want to choose some random dates in time. And let's see how over the course of time, high relative safety stocks have done in relation to the overall market performance. So first thing, I'm going to go to my date column here, and I'm just going to choose some dates at random. Let's start with an easy one. Let's go back to, let's go to the year here. I want to go back to 2015, February 2nd. Why February 2nd, 2015? That's when I started working at VectorVest. Let's start that right there. And let's take a look back then. What were the highest stocks ranked by relative safety? We got Nike, Danaher, Church & Dwight, CVS, Humana. Now what I'm going to do is I'm going to do a quick test on the top 10. Why the top 10? Well, it gives you a really good diversification here. So sometimes you look, it could be all 5 pharmaceutical stocks, but we want to make it a little bit more diverse. Let's take a look. I'm going to drop down my quick test, and we're going to quick test the top 10 stocks. Click on the top 10, and let's take a look. All right, so over that period, we've got 9 winners, 1 loser. The annualized rate of return, 24.26%, beating the market's 8.97%. All I would have had to do to get a good return on my money the day I started at VectorVest was buy shares of the top 10 high relative safety stocks and just let them sit. Now again, I understand that this can be difficult for some people because they get tricked into getting out of their positions at headlines. They get tricked into, letting them go. And you also have to remember, this doesn't include things like dividends. A lot of these stocks pay dividends. That's going to add to your annualized rate of return. All you do is you buy these 10 stocks and you outperform the market. Well, let's pick another date here. Let's go pick something in 2020. Let's go to 2020 and we'll go to June 10th. Click OK. All right. So these are the top relative safety stocks on June 10th, 2020. So we've got Old Dominion, Fortinet, Regeneron Pharmaceuticals, United Health, West Farm. So there's some pharmacy stocks and there's some home builders. Cool. Let's go out there. And again, we're going to quick test the top 10. What do we see? We see 8 winners, 2 losers, a 10% annualized rate of return on the VectorVest composite versus a 20% average on these stocks, annualized rate of return. Again, you're just picking the top 10 relative safety stocks. It is that simple. Sometimes it is that simple, and it's good. Let's pick another date. Let's go to, let's see here. Let's go back to the watch list. Let's go to, now, while I'm doing this and just picking random dates, the reason I'm doing this with you is this is one of the first things that I learned at VectorVest. I learned about relative safety. I learned about how it's easy to pick good stocks over the long haul. And this is a basis for how I pick a lot of my stocks when I do my options trades. But I'm not here to talk about options trades tonight. I'm here simply to talk about how to find good stocks over the long haul. Let's choose 2012, October 5th. Okay, again, I'm just choosing random dates. I'm doing it live because I don't know what the results are. But I'm confident enough to show you that these stocks, simply choosing these stocks, can outperform the market. It's that simple. Okay, October 5th, 2012. Top stocks: Novo, Apple, Church & Dwight, Danaher, Costco, Ross Stores. I know you could probably look at a lot of these stocks and you're like, these are good stocks, Ron. Well, they were good stocks back in 2012 as well. Let's quick test them. Guess what? 10 winners, no losers. 35% annual rate of return versus the VectorVest composite at 11%. And again, I'm not cherry picking here. I'm choosing random dates. I'll do one more. Let's go to, I don't know, what year haven't I chosen yet? 2018, March 2nd. Click OK. What are my top stocks? Novo, Cognizant, Apple, New Oriental, Monster Beverages, Accenture. All right, cool. Let's quick test them. Look at that. Now, from 2018, look at the market only did 7%. These stocks, 16.5% annual rate of return. Now, some of these have been great, 30, 35%. Some of these are at 16%. It's okay. You're still consistently beating the market. And again, I haven't even talked about things again like dividends. I haven't even talked about some of the more advanced trades that you can do with these things. We haven't even talked about adding market timing into this or things like Profit Locker where you can do stops. I'm talking just buying safe stocks. That's all you have to do. Okay? One takeaway from tonight: beating the market is not as hard as it needs to be. Pick good, safe stocks. VectorVest is the easy way to find them. Relative safety is your target. That's all. Keep it simple, and yes, you can outperform the market.